I got a pocket full of rest of who the fuck. Oh shit, my mic. All right, hello, hey, chat. I mean, fix this. Hold on. Hold on, nigga. It's just big. Where the f- is it at? Is you like that? There we go. Nothing in the. Is you like that? Where the? There we go. Mm. All right, my bad, my bad. What up? How y'all feeling? How y'all living? How y'all feeling? How y'all living? How y'all lives? How y'all ain't? Jessica. Shout out to YouTube, man. We've been getting a lot of support on YouTube. I could definitely say that. It's the Shay Shard name for me. Change your name. You up early? Yeah, we up. Shit, baby. If it ain't about no money, then it don't make sense. It don't make dollars, then it don't make sense. I took you in the back and I took yo. All right. So day trading is the topic. What do y'all know about day trading? You don't know nothing about it? Wrong answer. Phil, I'm getting ready for work now. Feel it? Oh, feel it. Oh, okay, okay. You get ready for work, dog. You don't know nothing about day trading? Oh, find a little quick video we can watch about day trading. Day trading is basically what you probably seen on like channel 28, no, 38, 37. Let's pull it up real quick. Cause you can make money while you at work. You hear me? You hear me? Make money while you at work, girl. Where we at? Where we at? Where we at? Share screen. Share screen. Window capture. That's it. There we go. Day trading market. This is Trading View. This is where you will get the accurate information on trading. Everything will be up to date as the market. So, all right, let's look at some markets real quick. Let's look at the cryptocurrencies. Let's look at all the coins. Let's look at Bitcoin, right? Let's look at Bitcoin real quick. So, Bitcoin is currently at 79,000. Right? So say for instance, where's my chat? Let's see the chat box down here. All right. Let's see some emoji. All right, so how to see where we be at right now. So all right. Um all right. So listen, y'all gonna be like, what the right? So at the top, as you see, like y'all definitely seen this on the internet before though. When it should be talking about like 79,000, it just got a number right here, like this number right here, right? And then it says Bitcoin, right? This is the number one cryptocurrency in the crypto market. There's more cryptos than just Bitcoin. You feel me? There's more. But we talk about Bitcoin right now. So right now, as you see, the market is going up and down, right? So it's at 79,000, right? If I go right here, wait, let's go back. Let's go back to some time where it was at. I'm trying to pull it back. Hold on. Trying to pull it back. I'm trying to show y'all the over. Okay, boom. All right. So basically, this is Bitcoin from this is where it start. Well, that's not quite where it started. It started Bitcoin started off really low, basically, right? So we go all the way back. See this little dinosaur? The little dinosaur is like basically I can't even see the damn dinosaur. It's right there though. But basically that's where it started at, right? So Bitcoin was worth 0 cents, right? So throughout the time, things that goes on in the news affects the market. So it affects Bitcoin. So if you look at Bitcoin news, right? So if I go over here and I just type in Bitcoin news, or I could look on that website I was just on, right? See, hold on, I'm gonna sound better. News about Bitcoin. Um, let me see. What type of see where is the news? There it is. All right, so this is the news for Bitcoin then. All right, so like all this stuff up here would tell you the news about Bitcoin, right? It tell you how many days ago, 9 hours ago, 5 hours ago, 1 hour ago. So this is the most current thing with Bitcoin right now. So due to the news on Bitcoin, right, it affects Bitcoin in the market, right? That's what happens. So certain things affected in a good way, in a bad way. So since it's already at right here 79,000, certain things that go off that's good will make the market go up. So it could go up from 79,000 to about $85,000. That's how much the market is worth, right? So, or it could go down. So, say for instance, at 79,000. So, if I go all the way back to the beginning, whatever, which I'm not going to go there right now. If I put in, because I could put in right now $10, or I put in $15, $20 on that mark, it says 79,183.47. I'll put it in right there on that mark, $20. So you can have it that the market is going to go up, or you can have it if the market go down, right? So it's called a buy. A buy means it goes up. A sell means it goes down. So to figure out if it's going to buy or sell, you have to look at these candlesticks. That's what these are, candlesticks. If I zoom in close, you see candlesticks. This is what it looks like up close. And like when you're reading it, when you're reading these charts, you wouldn't know what's gonna happen next. Right? So the goal is to get in on the lowest drop. That's what you want to do. Get in on the lowest drop. That's the whole point. So you can make some money when it goes up. So as it goes up to a certain point, right? You want to get in on the drop once it's up so far. That's why you have to read the candlesticks. It's going to let you know off the reading what's going to happen next. And that's the whole point, is to learn how to read the candlestick. That's why I can literally look at the past of what happened. I literally look at the past of what happened, right? And I can read off the past, and it's going to basically let me know what's going to happen at the past. So, as you can tell, just off of this part right here, right? Boom. So, like, say for instance, I got it right here on the mark. I can mark it right here. And all these little tools over here is for you to mark your charts. Whenever you start learning how to mark your charts, you'll be using certain tools. It just helps you know so what's gonna happen next. So for instance, like right here, boom. When this was right here, right? Like at a sale, it's basically the sale, it drops. So it was dropping, dropping, dropping. Remember, red is dropping. So red means right here, when I tell you I sell, right? Sell. And the green goes up, which is what? A buy. That's what that is. A buy. Um, I don't know if it's still gonna let me. I gotta log in to this damn account just to show this shit. I believe I gotta log in this shit so I can see the rest. I was trying to show y'all real quick before I even logged in on that shit, but it just did that bullshit though right there. It really just did that. It really did that though. Anyways, yeah, I know. It just did that bullshit. So basically, overall, what I was saying was, right? For instance, let's go to the beginning before we start watching the videos, though, because I'm just showing y'all from my words and what I'm showing y'all. Bitcoin was a shit at the time. I mean, this shit was a nothing. Well, doing that, you had money in this shit. Say I had $10 from the beginning. Say I put $10 right here, right? I just invested $10 in this shit, and this is 2010. No, this 2009, right? So this shit ain't really start moving. We zoom in, right? Cause we could literally zoom in. Like you could see how Bitcoin was doing at the beginning, right? You could literally see on this 5 right here, it was jumping a little bit. It's still at 0 cent though. Jumping around. Basically, it was nothing. Bitcoin was a shit. Feel me? Jumping around, jumping around. It's still at 0. So if I back up, right? Back up out of there. Right? From when I was showing y'all. Fuck. Fuck the shit just fucking go. Hell. It done stole the chart. It done stole the whole chart. I can't even see the damn market no more. Fuck. I don't even know what just happened. Alright. Overall, if I put in $10 from the beginning when it started, right? You see it's at 79,000. If I put $10 in at the beginning of Bitcoin, I would be up $887 million. All right. Thank you, Don, for my subscription, baby. Thank you. If I put in on Bitcoin from the beginning of when it started $10, I would be up $887 million. Is anybody catching that? That's what I'm trying to. I literally just looked that up. Chat. I'll show y'all this shit. It says it right here. I would be up $887 million if I would have jumped in on Bitcoin. I don't even know what that is. All right. So I would be up $887 if I was in Bitcoin, like I said from the beginning. Overall, I wasn't. So throughout the time, Bitcoin trending, and then it looks like it started moving up more. Like, let me see when it really started moving. So like it started in 2009. So when I showed y'all 2009, as you see, like it really started getting some movement, right? Like in between right here. See Bitcoin getting some motion. It's getting some motion, right? So if the buy is going up because if you put in while it's going, that means you put it on a sale. A sale means it's dropping now, right? So as you put in on the shit, you don't want to think like this market is just about to crash down. It's already at the lowest of the lowest. It just started. You feel me? It's at the lowest of the lowest right now. The beginning is always the lowest. If I put in $10, I can't lose $10 because I'm already in there at the beginning of everything. It can't even drop, right? Once it go up from where you put in at, it can always drop back down, right? It could drop so far down back to where you started at $10. Remember that. All right. So the time I got $10 in, boom. This started moving up. It really started moving right here. Up and down. It kept going up. The green goes up, up. And then it was going up like these little lines right here, going up. Then it started going down. Like this. This was the candlestick, but it closed. This candlestick means it closed right here. That's what that line is. But it still was going up. As long as these stretch, you making money. Literally for $10. You making money. As long as it's going up. Off that $10 you came up from right here. Right? You still up. Even though you see red, it's still dropping money off the money you came up. So you feel me? You still up regardless off that $10. Boom. The next one loads up. So this is the thing. These candlesticks, they keep going after a certain amount of minutes. They only go up and down so far, then it stops. And then the next one load up. This one loaded up. It jumped up though. It went from here to your money going up. You probably went off of $10 to about $500 off of that. Boom. It's right here. See, it was going. It was going right here. It was a resistance. This is a resistance right here. That's what that line is. It's a whole resistance line right here. So as you see it right here, it was going up, 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 up. Resisting now, resisting now, resisting now. It was going down. It's going down. At first it was red, but it turned green though. Let's go show this as it got done. Next one came up. It's the next one. Overall, your money just going up though. Like this is 0.03 cent. Feel me? You up off 0 cent. Boom. Next one load up. Boom. So what was going on in this market? It was showing right there. Overall, I don't know why I just clicked that. But overall, the market went up from 0 cents to 79,000. That's the whole point, is what I'm telling y'all. And went from nothing to something. Bitcoin went from nothing to something. As we can look, I'm gonna just go through this. Let's go through it from where we looked at it from the beginning. Boom. As you see, that shit was going up, going up. Boom. It's going up and down. That shit went up to a point it resists all the way down, though. Resist, resist, resist. Up and down, fucking around, fucking around. It's called retest. The retest means it's going back to the same pattern. You just gotta know when it's gonna retest. Because that means it's either about to go up or down. Boom, it's going up and down, up and down, up and down, up and down, up and down. Now, what they call is a bull, right? The bull ride goes up. That's what they call the bull ride, like a literal bull. Bull goes up. So it was forming a whole bull shape right here. It's forming a whole bullshit. It's going up and down, up and down, up and down, up and down. Retesting, retesting, up and down, up and down, up and down. Then it really took off literally right here. As you can see, this shit went all the way up here to $905. Off at $10. So if you did $10 and it hit 900 on the chart, how much would you have? Let's see. I'm about to look it up. If you put $10 in off that from the beginning, you would be at 1,100 and let me see, $1,105. Wait, no. Hold on. So, okay, yeah. So yeah, you would be at $1,100 if you hit that shit from 900 from zero for $10. When you start the zero mark with $10 at 905, you be at $1,100 if you did get in on that shit. And I found out how to do the math. So what you do What you do? Cause that's at 100,000. $10 will become 100K Bitcoins. So that's 100K Bitcoins at 900. Okay, got it. Yeah, you would have definitely been up $1,100, right? So overall, boom. Overall, we don't even see where we started from. Like barely can see it. You see how far that shit is back versus to where it sits right now. So you would have been made if you would have stayed in from 2009 because look, this the time, it's the time because you can see the time at the bottom of the screen. That's from 2009 though. It's like a long term thing. 2010, 2011, it really started getting action in 2013. That's when it really started getting action. 2013, right? And then when I was showing y'all right here, when the shit really started going up, people started making money. Like the talk was like around this part. This was around November, the end of the year, November 13th, 2013, for 9. So what? 10, 11, 12, 13. That's 4 years. 4 years till Bitcoin really took off to this part right here at the top. Right? And if you kept your money in there and didn't touch your money, you still just be adding that shit up. You could take money out. Remember that. You can always take money out. Just don't take all of it out, especially if it's about to keep going up. All right, so let's keep looking. Boom. So as you can see, this shit took another jump. It took another big jump right up here. So it's going on a little patterns. 2014, 2015, 2016, 2016, 2017. So if I don't y'all didn't pay attention, but like throughout the years with Bitcoin, it went up by the beginning of January every year. So close to the end of the month to the beginning of January. That's how that happened. So I'm gonna keep moving. Boom. So we then came up from all the way down to for $0 and moving up to a whole nother jump. And here go this damn part again. I just need to sign in. I just need to sign in. Don't worry though. We'll sign in a minute though. All right. So yeah, boom, all the way, boom, 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 kept going up, kept going up, kept going up. This is all Bitcoin kept doing. It was going up. Over, up and down, 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 up and down. Then it drop. So from this part at the top, remember it got to this top. This November 21st. That motherfucker drop came down, up, down, up and down, down, up and down, down, up and down. Drop. So 2022, they kept dropping. So it's been dropping since, from this part right here, it shows November 21st. November 21st to, this is November 22nd. Right? This is literally in the day. It's a whole day worth. That's what I'm saying. You could literally make money the same day. You could literally make money the same day. And this shit is not a scam. That's the thing. This is not a scam. You can see the dates. Literally. Shit says it at the bottom. Y'all can't even see this shit. Hold on, let me move this shit up. Yeah, so literally November 2021. November 22. You know what? Matter of fact, what is that? Is that the year? It is the year. That's not the date. That's not the date. But overall, if you was up here at the top and you got in on a sale, because this reached the peak. Like this part right here reached that peak. Let me zoom in on it. That's the peak. The peak is literally right here That's when it started crashing down. Like it was resisting on going up. At first, it was going up because it was green at the time. It dropped down and turned red. That's what happened. So right here, it literally stopped, and that's when everything started going down from this part. From uh, what's that? November, November 10th, 2021. So as y'all see that part, like I just showed y'all, right? From there, if you would have got in on the sale, right? Sale at the top, I would have put in on the sale. You click sale, it shows you how much you want to put in on the sale. You was up there and that shit kept dropping, you was making money off the drop. You making money off the drop. Even though it's up and down, overall it was up here. But it dropped all the way down here. That's how that worked. But a lot of people would have took money out during these times though, throughout this time, because this was in, like I said, 2021. Down here, let's see what the further, how far did it get down? It got down to right down here. Let me see that last drop. These big lines right here, this shit start doing something. Like it start dropping crazier. Crazy. That's why you see the long ones. Like that's when you know something about to happen. Like it was resisting right here. Resisting. It came up, but it still was dropping down. Because it dropped down from here. And it kept dropping down. But it resisted, went up. When you see shit like that, that means the market eventually about to turn over. You see that line? You see it's a long one, right? You see like it ain't full, it's not fully a rectangle. Well, candlestick. It's not a full red candlestick because it was resisting because something's about to happen next. Boom, that got done. The next one started loading up. Right here. Another one started loading up. It started dropping down more. And this is, what year is this? This is November 2022. So this from last November 2021 to November 22. You put it on the sale, that shit dropped down, you making money. But if you put in that the market's gonna buy off of that drop that was all the way to the top, but you thought the market was gonna go up, you would have lost money because you said the market was gonna go up, but the market actually went down. So that's money getting took from your account, because you didn't get in on the right play. You literally got in on a buy, but not the sell. That's why you have to learn how to read the market, right? That's why you have to learn how to do that. Okay. All right, so let me go back. So boom, as it was down there at that sale, it started shooting up. So it started shooting up, like when I told y'all, those two candlesticks right here, it started doing some freaky shit, them long ass wicks. That's when you know some shit about to happen. And it's forming a bull. That's what's going on. It's forming the bull, which is making it's retesting. Basically, what I told you when it retests, that means it's going up and down like this. This is the retest. It's retesting right here. And then it's dramatically because like if I go right here, right? Do you know what's about to happen next? Hold on, I'll show you this. Without me having to show y'all what y'all already seen, you won't even know what's gonna happen next. This already what happened in the past. All this shit is already what happened in the past. This one right here, where this wick is at, is currently what's going on. Not right now at the moment, but at the moment at that time, this is going on. So a lot of folks wouldn't even know what to do, but you have to read this, and it would basically tell you what's going to happen next. That's why when you learn how to read these candlesticks, you're going to learn when to put your money in. That's what I'm saying. Right? So, say for instance, you did put in on the sale. You got the market's going to drop. Market did drop. It dropped some more. But you might want to be watching it just to see how far it's about to drop. So, like, boom, the first one popped up, right? And then I slowly keep moving. Okay, that happened, and that dropped. It's like you still watching it before you put your money in. It's like, do I want to get in on the sell or do I want to get in on the buy? Okay. So now what it's doing is retesting. It's retesting. It's retesting. It's retesting. You just watching it. Just watching it. Just watching the market. Just watching it. Just watching it. Now you see that shit about to start climbing up, right? You see it's about to start climbing up, but you still see it's dropping at the same time. Right? So if you would have got in between these parts right here where they playing around head to head, this was already a sign to get in on the buy. And this was already a sign to get in on the buy. This was the sign right there when you seen that shit dropping like this. Right? You keep on looking. Right? So you went in on the buy. Money start moving up. Fluctuating up, 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 up. It's going up and down. Up and down, up and down. Up and down. It's retesting. Now it's starting to shoot up. Shooting up, shooting up, shooting up. Y'all wasn't even ready. Cause look, if you was literally looking at your phone, you literally looking at your phone, watching this shit move up or your computer, you literally watching your money just go crazy. Like your money is just shooting up. You literally watching this shit. I started this shit. I'm like, damn, I'm making money right here on my fucking phone in the middle of the night, like right now. 4 o'clock, 2 o'clock, 3 o'clock. Watching your money shoot up. And you could decide if you want to take your money out or not. You just gonna leave it in. Right? So imagine that. You was watching, you put in $20, you watched that $20 then grew. That shit then grew to about $800. $800. 800. Look at that. It shot up. The market went up. It went up so crazy. It went up so crazy. That's why I say that you have to learn how to read the charts to know when to get in and get out or leave in. If you was on a buy play from right here, it would have literally, you would have been literally gravy though. I ain't gonna lie. You would have been good. Right here, look. Look at that ad. Because you could literally mark the chart. This why look, this is real educational. Like, wish we could have learned this in school. If we ain't learning in school, you gotta learn on your own. We could have been doing this shit in school, market shit up, market shit, learning how to mark shit, learn how to read candlesticks and making money. Right? So look, so I just marked the chart, right? Literally what I was saying to y'all, even though that just popped up. It popped up, but overall, for that part to where it went up, you would have been making money by the end of the day. You would have been making money off of whatever you put in on it. And this is currently where the market is at right now. Where you see it's red. Where you see it's red, that's what's currently going on right now with Bitcoin, which is at $79,000. 79. It's at 79,000. Like I said, you could literally watch the news, read the news about what they talk about with Bitcoin. You can literally look at the news on any cryptocurrency because there's more. There's Doge. You got Dogecoin. A lot of y'all probably heard about Dogecoin before. Like, this shit is still here. It's still here. Feel me? And I believe Dogecoin gonna take off way, way faster than a lot of people think. I got money into it. Shit. But overall, like I was saying, that's currently where it's at that red mark. This is currently what's going on. And look where the market is at. It's at 79,000. From where I was showing y'all just a while ago, that was at 20,000. So we going all the way down. That was at 20,000. Think about that. That was at 20,000. This is at 79,000. Like I said, if I would have put $10 in at the beginning of Bitcoin, I would be up 800 is eight. It says $887 million today. If you held every coin, just for $10. But you know they gotta do taxes and shit too, so definitely make sure you got them taxes out the way with that shit off the millions. But you will be up $887 million off of $10 today. I'm trying to see how much I would make. Is anybody in my live catching this shit? What y'all talking about? So if you just see the red drops without the green, is that good or bad? You have to just keep watching it, Ashley. It's like a whole process. You gotta watch it. You need to look at the history of what already was going on versus what's going on at the moment. Don and Ashley, y'all the only two that's paying attention. Got it. Let me see. I'm trying to see how much I'd be up if I was. Let me see. Ash is here too. Ash. Um. Oh, Ash Chanel. Okay. I be getting y'all confused. So I had looked up if you mean name Bitcoin actually being if it wasn't really possible to buy it, is a return calculation would be by okay, so 50 divided by 0.9 is 55,000 Bitcoin. If Bitcoin is at 79,000 right now, boom, right? It is at 79,000. So it'd be if I put in $50 at the beginning of Bitcoin, right? From where I showed y'all at where the dinosaur was at, how much money y'all think I'd be at? How much money y'all think I'd be at if I started with $50 at the beginning? In the billions, I think. Is my voice thing ain't on, right? Trying to make sure. My voice thing is couldn't nobody y'all can only hear my voice squeaky? Anyway, with this or Bitcoin? This is Bitcoin, girl. My money will be at $50 near the very beginning of Bitcoin. About $4.4 billion. If I put $50 in at the beginning of Bitcoin, I would have been at 40. Wait, now read that again. No, $4.4 billion. I'll be at $4.4 billion. If I would have put $50 in the beginning of Bitcoin, and it's at 79K right now, right? And guess how much? Guess how much I would be off $1? Off of one single dollar. If I put it at the beginning of Bitcoin, right? And y'all could put $1, $2 at in any new cryptocurrencies that's on the app. Fuck it. And see where it'll bring you. Cause you might wake up, that shit might take off. And you just got in off a brand new crypto that got created. But $1 it would have brought you at $87.8 million off $1. Off a single dollar. Off $1. Right? So the thing is right now, what's gonna happen next? This currently what's going on. Which chart is this though? This currently this is currently what's happening. It's all about figuring out what's gonna happen next. This red mark, what's gonna happen next? So you suggest apps like Coinbase or what? It's a lot of different apps you could use, Ash. It's a lot. I got some. Um Honestly, you gotta know the trader's creed to not emotionally trade. Yeah. Overall, you need to learn how to do it. You just gotta learn how to do it. But yes, my suggested apps, like I said, I ain't gonna say them, but right now, but I want to make a trading group. Honestly, I was gonna do a trading group. I'm trying to see if I wanted to do it on Discord or Telegram, though. I'm trying to see which one I want to do. Yeah, I definitely might think about doing a trading group. So overall, this app, right, or the website's an app too. It's called Trading View. Trading View is where you're gonna, and it's free. Get started free. Trading View is where you're gonna see everything accurately going at the moment. Everything is accurately going on this website. They got everything: futures, forex, which is trading with other countries. See, they got different countries on the shit you can do. Different type of peers. It's so damn many. It's just so many you could trade with. And you literally just look at the news off of this shit. Like if you scroll down, they got shit they talk about. It's just so much with it. Thanks for the info. Oh, I wasn't even done though. Like I was about to go to old girl page right here. She got some sauce too. I was really just giving y'all the little beginning off of what I'm basically letting y'all know on this whole little shit. But yeah, like I said, this is Bitcoin news. Yeah, and this is free. This is free. Like, I could be charging y'all for classes and shit like that. Honestly, and other people be copying other people trades too, and they be making bands off of copying. Like the dude I was talking to on here, y'all wasn't. I don't know. A lot of y'all were in my live when I was doing a little match. Make it not the match. Yeah, the matchmaker, but not like literally matchmaker, but like people randomly pop up on here. I was talking to the dude, and he put me on this app, and the app basically is like it's a trading. It's like a trading social media app where you can see what people invested their money into and how much these people even got on their account. Like accurate. But that's why when you make the account, you want to make sure you make a low key profile. I'm gonna send that too in the Discord so y'all can get it. All right, so let me pull the video. We better get to the video now. Let's get to the video. Let's get to the video. Can we? Let's do it. Facts. Mm-hmm. There's sound. Yeah, wait, y'all can't hear it. No. Hold on. Y'all can hear me. Hold on. Oh wait, hold on. I got my. It's because I got my shit coming out the. Gotta have them come through the headphones. Tell me if y'all can hear it.
We are back with another video, and today we're going to be getting back into day trading basics. So I wanted to kind of start a series on YouTube where I broke down things about day trading and chart reading so that way you can understand it in a way that is palatable. I'm just not a believer in long videos. And I don't think trading needs to be that hard. Now, that is not to say that trading is not hard. Trading is hard, okay? It will take you through the ringer. But if you're committed to this thing, then this is a great place to start. So today we're gonna start with candlestick basics. I'm so excited to start this beginner series. I love teaching. Anyways, I'm not a big fan of yapping. I am, but not in these kinds of videos. So let's just get right on to the charts. All right, so we are covering trading for newbies. So if you are a beginner, this is definitely the video for you. You're probably sitting and wondering, like, okay, like what is a candlestick? Well, when you guys see a stock chart, right, you guys are probably thinking to yourself, it's something like this right here, right, where they're moving up and down, and they just do all kinds of crazy things. But you would be surprised to know that every single one of these lines tells a story. So when you are talking about reading a stock chart, so when people ask, why do I take trades? How do I enter? How do I take a trade? Well, first and foremost, you need to understand what's going on with the candlesticks, okay? So that is what we're going to be talking about in today's presentation. First and foremost, why do candlesticks even matter, right? Candlesticks are way more than just decoration on a chart. Every single candlestick that you guys see either paints a story of who's in control, buyers or sellers. Those are our two characters for today, the buyers and the sellers, okay? They also leave clues to help you decide, when am I actually going to take a trade? So when we're thinking about the stock market going up, we're thinking about buyers because buyers push the stock market up, right? We're thinking about the stock market going down. We're thinking about sellers because sellers push the stock market down, right? I like to call candlesticks a visual representation of a conversation between buyers and sellers. Let's not think about it as something that is just so hard and so unattainable, but rather let's think about it as seeing a conversation play out in real time. First thing about candlestick structure, right? We have bullish candles. The word association that I like to use is bullish, up, green, right? So when we see a green candlestick, right, I'm thinking that the candlesticks are going to push up. I'm thinking bullish. So if we are traders, right, the two vocab words you're going to want to know are bullish and bearish. Bullish means that we think a stock is going to go up, whereas bearish means that we think that a stock is going to go down. So if you can explain bullish and bearish, you are already on your step to being a great trader. Now, bulls push the stock up, right? And they represent buyers. So you think about it this way, right? Like if it closes higher, buyers are on fire. Get it? Okay, well, tough crowd. All right, so this right here is a candlestick. It looks, I guess if you think about a candle, right? A candle would look like this. It has a little wick on the candle up top. But when we're thinking about stock candles, they have wicks on the top and the bottom. The difference between a bullish and a bearish candlestick, if you're taking notes, write this down. A bullish candlestick opens at the bottom and closes at the top. So when we take time and we go look at our charts, I'm going to show you guys that as candlesticks are forming in real time, we are seeing that they're either growing or they're getting smaller. So when a green candlestick opens, it opens down here, closes up here, and it pushes towards the upside, okay? Now,
is y'all understanding? Y'all understanding? Like this simple right here. Like this is ABC. Y'all understanding? Open on the bottom. Yes, kinda. Probably need to hear it again. But literally, what she's saying, like I told y'all earlier, bullish. The bullish goes up. Like you could tell, like how this is right here over here, how this is on the side. It was forming a bull. Basically, it was forming to go up. That's what the bullish say. That's when you figuring out the market is going up. And bear is down. Yes, yes. Bulls push up. That's what it's saying. Bulls push up. Like I told y'all, it goes up. Closes above is open. So it starts where it opens right here. Like when it first went, like when I told you how the next one comes, the next one comes, the next one comes, the next one comes, right? So the next one came, it opens wherever it opens. Right here, it opens. It opens. Remember, it opens. It opens right there. It opens. Well, it actually opened right there. So wherever you see the wick at is where it opened at. It opened. It opened. And it opened right there. It opened right there. It opened right there. Hey, right? That's what that means. When she's saying that. It opened wherever you see that green at. or it could be at the low, but the wick can form. So this the thing. Before it was that, right? Kind of threw y'all off a little bit if y'all didn't understand that. So basically, when a new one opens, right, that means the next one pops up. So the open part is literally right here where it starts. It starts building up right there, right? So you get this line right here because it start selling. It was going down. So at a time when it was right here when it first opened, it was going up and down, but also reached down. It went down right here. So when it opens right here, it formed that wick. The wick is right here, and it went down. It was red. When it go past this open part, see where it says the wick? That's when the wick formed. The wick formed when it start going low, which is a sell. So it was selling, but eventually it started going back up. It went back up, and it went up so high. Cause right here, there's different charts you can watch. You can watch a 2 minute chart. You can watch a 5 minute chart of the same wick. You can watch this for 5 minutes, doing this up and down, watching it for 5 minutes. Just watching that shit up and down until the next one is formed. So, like I said, it opened right here. Simple test. It opened. It first ever, like a whole new thing just popped up. It was just a straight line, just like this is a line. It was a whole green line. So the line would start right there with all this extra shit. It was just a straight line. It started going up and down, up and down. Like I said, and it came down here and went back up. And went back up and down, up and down. So just like the Bitcoin example, the wick was long, then it started changing. Exactly. So it was doing that for the time that the next one came and the next one came. So overall, like I said, up and down. The body, of course, is this whole thing is the body. That's what you call the body. The whole thing is called the body. You see these lines? It's called the wick. But it started right here. Like I say, opening with a straight line at first. It didn't have the body. It started off with a straight line. Like I say, eventually went down low. Like it could have went down further. The wick would have been longer than if it went down further. This is a wick right here would have been further. If it stopped right here, if it came down from this part to the bottom, it would have came down here and would have went back up, and then it would have formed the whole wick. The wick would have been longer. Just like you see this wick right here, would have been just like that. So it kept doing it up and down, boom. And the next one came, either sell or buy, went down or went up. I don't know. They just showing an example of this right here. And it closed, right? The close means after whatever chart you watching, the 5 minute chart or the 2 minute chart. Like I said, this was going up and down, up and down, up and down. It got high and went up here. At first, the whole body was up here. Body was up here. The body was up here at the top. That's why the wick is right there at the top. That's why you see a wick, right? You see a wick here. You see a wick there because the body was moving up and down. Does a longer wick means more buyers? Yes. Yeah. So like basically when it's buying overall, it's like it's the more buyers, then it gets longer, gets longer, gets longer. Sometimes we get more sellers that sell. And then it's really off the news too, Ash. They all affected at the same time. So overall, like I said, it was going up and down, got so high and got so low. Then it just stopped after 5 minutes. It stopped right here. Boom. It was done. It was done growing. It finished growing right here. Right? It formed the body. So it's going through fights and tribulations, up and down, just going through fights, up and down, up and down, up and down, fighting. And then it just ended up stopping right there. Boom. It stopped. You know? All right, so that's what she explaining right here. So the bullish means go up, right? Like a U. You see the U? You can see that actually forming in some charts. It's like a U. You can tell what's going on. The bull pushes up. Closes above is open. Open right here. It closed above it. Right? Represents buyers. If it closes higher, right? Represents buyers, right? If it closes higher, which is what she said in the chat. When she talked about what you said, does a longer wick mean more buyers? See, it represents the buyers if it closes at a higher, feel me? Right? That means the buyers are on fire. The buyers are on fire. All right, so let's rewatch that. So listen and pay attention.
Candlesticks. Okay, so that is what we're going to be talking about in today's
presentation.
presentation. First and foremost, why do candlesticks even matter, right? Candlesticks are way more than just decoration on a chart. Every single candlestick that you guys see either paints a story of who's in control, buyers or sellers. Those are our two characters for today, the buyers and the sellers, okay? They also leave clues to help you decide, when am I actually going to take a trade? So when we're thinking about a stock market about the stock market going up, we're thinking about buyers because buyers push the stock market up, right? We're thinking about the stock market going down. We're thinking about sellers because sellers push the stock market down, right? I like to call candlesticks a visual representation of a conversation between buyers and sellers. Let's not think about it as something that is just so hard and so unattainable, but rather let's think about it as seeing a conversation play out in real time. First thing about candlestick structure, right? We have bullish candles. The word association that I like to use is bullish, up, green, right? So when we see a green candlestick, right, I'm thinking that the candlesticks are going to push up. I'm thinking bullish. So if we are traders, right, the two vocab words you're going to want to know are bullish and bearish. Bullish means that we think a stock is going to go up, whereas bearish means that we think that a stock is going to go down. So if you can explain bullish and bearish, you are already on your step to being a great trader. Now, bulls push the stock up, right? And they represent buyers. So you think about it this way, right? Like if it closes higher, buyers are on fire. Get it? Because, okay, well, tough crowd. All right, so this right here is a candlestick. It looks, you know, I guess if you think about a candle, right, a candle would look like this, has a little wick on the candle up top. But when we're thinking about stock candles, they have wicks on the top and the bottom. The difference between a bullish and a bearish candlestick, if you're taking notes, write this down. A bullish candlestick opens at the bottom.
Yeah, if y'all taking notes, definitely write it down. If you really we don't got a million people in here. The smallest crowds be the better crowds. I ain't gonna lie. So definitely take notes like you actually learning some shit in school. Or I'm gonna keep the video up on my Twitch so y'all could go back and watch the video over. All right, definitely take notes. Like this is shit that we should have been taking notes in school. Like shit that could actually help us make money. How you been taking notes? Okay.
Bottom and closes at the top. So when different. But when we're thinking about stock candles, they have wicks on the top and the bottom. The difference between a bullish and a bearish candlestick, if you're taking notes, write this down. A bullish candlestick opens at the bottom and closes at the top. So when we take time and we go look at our charts, I'm going to show you guys that as candlesticks are forming in real time, we are seeing that they're either growing or they're getting smaller. So when a green candlestick opens, it opens down here, closes up here, and it pushes towards the upside, okay? Now, this is the anatomy of the candlestick. The bottom of the candlestick is the open. The top of the candlestick is going to be the close. But this whole thick part right here is called the body of a candlestick, okay? The way that a body of the candlestick looks will tell us a lot about the strength and what we could probably be doing on the next candle. Now, these little lines right here are called wicks. So if you guys were to go to Bath and Body Works, right, and see an actual candle, the candle itself would have wicks on the top and the bottom of it. It's the same thing with a candlestick for trading. You're going to see wicks at the top and the bottom. Now, because a candlestick opens here and closes here, the wicks are showing us the highest and the lowest point a candlestick was open during that time frame. Again, when we get on the chart and see an example, I'll show you guys different time frames and what I actually mean by this. But as of right now, we know that the body is the thicker part. The little lines are the wicks, okay? It is a representation of where price once was. So let's say a candlestick was open for 5 minutes, right? Between those 5 minutes, the candlestick may have gone as high as here, or it may have gone as low as here.
That's basically like what I was just telling you. That's literally what I was just telling y'all. Literally, this shit is not hard to learn, chat. I'm telling y'all. Pay attention. This is easy way to make money. Easy.
So that's what we're going to be seeing represented on the wicks of our candlestick. Again, bullish, we are thinking upwards. If I were to sit here, I love drawing this little diagram. If I were to sit here and draw a bull for you guys, right? Hold on, let me show y'all my bull.
She irritating.
If I were to sit here and draw a bull for you guys, right? Have you guys ever seen, like, what's that one movie, Ferdinand, where they had a little dude and he was like the little, what are they called, matadors, and they had a little red thing and they like, anyways, if a matador were to go up towards a bull, right, and it just was not his day, he's going where? Upwards. Get it? Because the bull would fling him up. Right. Thank you. All right. Moving on.
Most trading mentors don't make money from trading. They make money from you. If your coach isn't pulling 7 figures from prop firms, why are you listening to them? Why do so many traders pass only to blow the account right after? You've probably been there. You passed it.
Bearish candlesticks, okay? They are just going to be the opposite of our bullish candles. So when we think about it,
it's the ass for me. Hey, Miss C, that's a fact. Because, man, I'm trying to tell you. So many people lost money. Like I said, when you don't know what you're doing, you're going to lose money. When you do know what you do, you're going to get some money. You funny is here to us the air for me. No, for real though. All right, so do everybody understand what the bull candle means? Everybody knows, or what? Everybody know? Okay. What's up, boy?
What up, bro?
Rise and grind, man. That was my brother. Okay, so y'all all understand. I don't think y'all look. Is y'all taking notes? Who taking notes? I'm in her Discord though. I don't think y'all understand. I'm about to start it over. I'm about to start it back over. I gotta pay attention. I need y'all to pay because this is the thing. I don't need y'all to be asking questions about the same thing we done learned about. That's the thing. I don't need y'all to be doing that. Alright? We gotta go through this all over again. I need y'all to understand this. I need y'all to understand. Is Mike, you in here? You in alive? I don't think Mikey in there live. Who the hell is you in UDQTJ? Who the hell is that?
I need y'all to pay attention. That's what I need y'all to do. Where is Mikey at? I don't know. I don't think Mikey in here. About to start this video over. Take notes. We talk about day trading. You ain't talk about day trading, don't talk about nothing in here. Trying to see where the hell, where is Mike? I don't think he in here. About to start this over. Welcome in, y'all late for class. It's the last time I restart this video. It's all right, Shay Sean, because guess what? You have to learn. Sometimes you gotta go over stuff again so you can fully understand.
If you're a beginner, this is definitely the video for you. You're probably sitting and wondering, okay, like, what is a candlestick? Well, when you guys see a stock chart, right, you guys are probably thinking to yourself, it's something like this right here, right, where they're moving up and down and, you know, they just do all kinds of crazy things. But you would be surprised to know that every single one of these lines tells a story. So when you are talking about reading a stock chart, so when people ask, why do I take trades? How do I enter? How do I take a trade? Well, first and foremost, you need to understand what's going on with the candlesticks, okay? So that is what we're going to be talking about in today's presentation. First and foremost, why do candlesticks even matter, right? Candlesticks are way more than just decoration on a chart. Every single candlestick that you guys see either paints a story of who's in control, buyers or sellers. Those are our two characters for today, the buyers and the sellers, okay? They also leave clues to help you decide, when am I actually going to take a trade? So when we're thinking about a stock market going, or about the stock market going up, we're thinking about buyers because buyers push the stock market up, right? We're thinking about the stock market going down. We're thinking about sellers because sellers push the stock market down, right? I like to call candlesticks a visual representation of a conversation between buyers and sellers. Let's not think about it as something that is just so hard and so unattainable, but rather let's think about it as seeing a conversation play out in real time. First thing about candlestick structure, right? We have bullish candles. The word association that I like to use is bullish, up, green, right? So when we see a green candlestick, right, I'm thinking that the candlesticks are going to push up. I'm thinking bullish. So if we are traders, right, the two vocab words you're going to want to know are bullish and bearish. Bullish means that we think a stock is going to go up, whereas bearish means that we think that a stock is going to go down. So if you can explain bullish and bearish, you are already on your step to being a great trader. Now, bulls push the stock up, right? And they represent buyers. So you think about it this way, right? Like if it closes higher, buyers are on fire. Get it? Because, okay, well, tough crowd. All right, so this right here is a candlestick. It looks, you know, I guess if you think about a candle, right, a candle would look like this. It has a little wick on the candle up top. But when we're thinking about stock candles, they have wicks on the top and the bottom. The difference between a bullish and a bearish candlestick, if you're taking notes, write this down. A bullish candlestick opens at the bottom and closes at the top. So when we take time and we go look at our charts, I'm going to show you guys that as candlesticks are forming in real time, we are seeing that they're either growing or they're getting smaller. So when a green candlestick opens, it opens down here, closes up here, and it pushes towards the upside, okay? Now, this is the anatomy of the candlestick. The bottom of the candlestick is the open. The top of the candlestick is going to be the close. But this whole thick part right here is called the body of the candlestick, okay? The way that a body of the candlestick looks will tell us a lot about the strength and what we could probably be doing on the next candle. Now, these little lines right here are called wicks. So if you guys were to go to Bath and Body Works, right, and see an actual candle, the candle itself would have wicks on the top and the bottom of it. It's the same thing with a candlestick for trading. You're going to see wicks at the top and the bottom. Now, because a candlestick opens here and closes here, the wicks are showing us the highest and the lowest point a candlestick was open during that time frame. Again, when we get on the chart and see an example, I'll show you guys different time frames and what I actually mean by this. But as of right now, we know that the body is the thicker part. The little lines are the wicks, okay? It is a representation of where price once was. So let's say a candlestick was open for 5 minutes, right? Between those 5 minutes, the candlestick may have gone as high as here, or it may have gone as low as here. So that's what we're going to be seeing represented on the wicks of our candlestick. Again, bullish, we are thinking upwards. If I were to sit here, I love drawing this little diagram. If I were to sit here and draw a bull for you guys, right? Hold on, let me show y'all my bull. If I were to sit here and draw a bull for you guys, right? Have you guys ever seen, like, what's that one movie, Ferdinand, where they had a little dude and he was like the little, what are they called, matadors, and they had a little red thing and they like, you know, anyways, if a matador were to go up towards a bull, right, and it just was not his day, he's going where? Upwards. Get it? Because the bull would fling him up. Right. Thank you. All right. Moving on. Bearish candlesticks, okay? They are just going to be the opposite of our bullish candles. So when we think about it, right, bearish candles mean that price is going down. So we think bearish, we think down, we think red, we think sellers are in control. That's what we're thinking about when we think about bearish candles, right? So with bearish candlesticks, they open at the top and they close at the bottom. Think of it this way. If something opens here and closes here, that means that it had to have been growing downwards while it was open. So that's why, again, bullish candlesticks open at the bottom and close at the top, and bearish ones open at the top and they close at the bottom, right? They are going to be representing our sellers, right? So if it closes lower, sellers take over. That's how I think about it. If you're bearing down, right, sellers are in control. Do we have any Bears fans? I'm a Bear fan. We say bear down, okay? So hard being a Bears fan. If I were to draw a diagram of a bear, right? What do bears do over the winter, right? Here's this little cave, right? Bears, they go down for the winter. So see, bam, close his eyes. Exactly. Exactly. Again, thank you guys. I will be here all week. So now we have an understanding. Bearish candlesticks, right? They're going to be pushing downwards, and bullish candlesticks are going to be pushing upwards. But what actually tells us a story, right? Like if I were to go up and look at this candlestick, right, or these candlesticks here, right? Why does this one push up so much? Why does this one go down? What is actually being shown on the candles? And again, if I were to show you guys a quick side by side, we're seeing the difference right here. Pause if you guys have to. Bearish candles, again, open at the top, close at the bottom, and our bullish candles open at the bottom and then close at the top. Learning how to read candlestick strength is so important, okay? Let's just disregard the green candle.
Did anybody understand that, or do I need to play that back?
Right.
Candles for a second, and let's just look at the red candles, okay? Right here, it says if we have a large top wick, that means that we have strong sellers. Why? If we know that a bearish candlestick, right, opens at the top and closes at the bottom, if we have a longer top wick, that's letting me know that at some point in time, this candlestick was all the way up here, but the sellers stepped in and closed it down here. Does that make sense? So even right here, right, it says big lower wick equals strong buyers. So if I know, again, bearish candlesticks open at the top, they close at the bottom. The fact that we have a wick down here, that's telling me that, hey, at one point, because again, wicks are a shadow, at one point, the candlestick was all the way down here, but the buyers are pushing it up to close here. Okay. If we look at the opposite way on a green candle, right? We know green candlesticks open at the bottom and they close at the top instead. So if I have a wick up here, that's letting me know like, hey, at some point in time, we were this high, but the sellers are pushing this candlestick down. Similarly, with this green candlestick over here, again, green candlesticks, regardless of where the wick is, open at the bottom, close at the top. At some point in time, because of the wick being down here, we know that this candlestick was probably red. It was all the way down there, but those buyers, they stepped in, they said, absolutely not. We're going to be closing higher. Does that make sense to y'all? If we have a large body on a candle, that just means that we have big momentum. We're pushing upwards. We have buyers and sellers in agreement, depending on whichever candlestick color it is. And that's what we're seeing there, right? Now, if we have a tiny body on the candle but long wicks, that means that we're kind of seeing like tug of war, indecision, weak candlesticks. They're not really, buyers are more prominent or sellers are more prominent. We're just closing in the middle. We don't have any strength on these candles, okay? So if you guys are taking notes, I would screenshot this, doodle this in your notes so that way you guys understand the difference between the candles and their strengths. So we're actually going to watch a candlestick form in real time on TradeZella. TradeZella is an application where you can track your trades, you can do replays, you can journal them, you can see a whole calendar. But because I'm filming this on a Sunday and the stock market is not open, this is the best thing that we're going to get to watching a candlestick form in real time. So I'm going to wait until this candle starts over again. This is the 1 minute time frame, meaning every single one of these candles you see show 1 minute of movement. So once this restarts, we're going to watch it move for 60 seconds. All right, so this candlestick has now opened, right? If I pause right here, we're going to note two things, right? On this candlestick, the open is right here, the bottom of this candle. Now, because that candle had jumped down a little bit, we have a tiny bit of a wick here, and we also have a wick forming right here. So keep in mind, just watching that little white line of where we opened at through this candle. So as this candlestick pushes down, right, it brings the body down. The open is still here, but now it's just looking like it's closing here. And it's leaving behind this wick that we have here. So as it pushes up and it changes to green, we see the buyers were trying to step in, right? And that leaves a big wick towards the downside. Now, as it's pushing down, the sellers, they're pushing it down again. Body's going towards the downside, and we'll see kind of how the candlestick begins to close. But as we see this happen in real time, we're noticing like, man, buyers and sellers really are fighting each other the entirety of the time. This candlestick closes in about 10 seconds, and this is what I would consider a pretty strong bearish candle. Why? Because it's a very long body. It looks like we're about to close towards the bottom, hopefully, maybe. No. I close a little bit up, and that's okay. But I would still consider this a strong bearish candle just off the body. Even though that we do have a wick, it's not the end of the world. Now, I personally trade on the 1 minute time frame, and when we continue on with our beginner series on here, I'll talk to you guys about time frames, how to figure out what works best for you. But I personally like to watch the last 30 seconds of a candlestick being open. To me personally, that gives like the best inference as to what could happen within the next candlestick. But if we look on this one right here, we'll note we opened right here, right? And as the candlestick fights, it goes up and down, it leaves behind this wick. And we see the buyers, they're trying, right? They're fighting, but the sellers are pushing back. And that's what's causing that tug of war between the candles, right? At this point in time, it looks like the sellers are really trying to step in. They're trying to push this candlestick downwards, okay? But before the candlestick closes, we see the buyers, they're doing their best, right? Now, looking towards this next candlestick, this one opens right here, right? Now it's pushing upwards. We're seeing this all happen in real time as you watch trades. Now, this chart right here is a little bit choppy for me, but usually when we have good, strong trend, we'll notice that on our candlesticks, it's directly reflected. So let's look at this trend right here, okay? If I were to look at this with you guys, candlestick by candlestick, and maybe you guys can look at some candlesticks along the side and kind of see what you see. But if I were to break this down candlestick by candlestick, okay, the first thing I'm noting is that at the top of this trend, right, the candlesticks seem to be pushing upwards. We're noticing that we have a pretty good majority of strong candles. Opens here, closes here. Let me actually use red and make it a little bit, actually, we'll keep it blue because that's easy to see. So opens here, closes here, opens here, closes here, opens here, closes here. We're not seeing too much on the wick side, which is a really good sign for us for pushing up towards the downside. Now, if you watch the video that I have on here, it's called The Easiest Way to Understand Charts. I taught a lesson on market structure. And just to recap that, stocks don't go up forever. They don't go down forever. They kind of go up and they breathe and they go up and down. That's what an uptrend looks like. So you see here, it goes up, it comes down, it goes up, and then we change and we're going down, okay? So just because we see opposite color candles within a trend does not mean that our trend is weak. It's actually very healthy for a stock to go up and down. So here we have some good uptrending candles. Then we have a strong red candle, right? One strong red candle does not mean that we're changing trend, but we want to see how that plays out. After this, we have this candlestick right here. What you'll notice about it is that even though it's a red candle, it's indecisive, right? It's closing kind of in that middle. So if I was in a trade saying that it was going to go up, which would be calls, if it was options, going long if it were futures or whatever you want to call it, I'd be like, okay, it looks like we're trying to push down, but we're still, I feel like the buyers are still trying to fight. Now on a candlestick like this, right? It's a green candle, but we close pretty low. I'd be like, okay, maybe buyers are losing a little bit of strength, right? But then we pick up strength right here. We pick up strength here. We're a little indecisive on this candle, but it's okay because every candlestick won't look like this one. Please note that, okay? We're strong here. We have one strong bearish candlestick here, which again, not the end of the world because stocks have healthy pullbacks. We're strong here. Again, open here, closing here, opening here, closing here. We have a long wick right there. So I'm like, okay, cool, we're great. But then at the top of this trend, we have a wick going as high as here, but we're closing down here. So I'm like, okay, maybe we're changing trend, right? Then another strong bearish candle. Here we have another strong bearish candle too. Even though we have a little wick down here, the body is still a bit bigger. Now, I want us to look at these two candlesticks here. Now, just because these...
Did y'all understand it, or do I need to go back? Let me know. Do I need to go back? I'll make sure y'all locked in.
These candlesticks right here are not big does not mean that they're not strong. Why? They are not, it's not because they're small, but we know that bearish candles open at the top and close at the bottom, right? So these wicks towards the top are letting me know that at one time they were green, but the sellers stepped in. So that's showing me relative downside strength. Then we have a strong candlestick here. We have a bullish candle here. Again, stocks go up and down all day. That's fine. We're pretty strong here. Again, long wick, but we're closing at the bottom. And then we have some strength, right? Now, what I really love to note about this little uptrend or this pullback right here is even though it's going up, we're not seeing strength towards the upside, okay? So here we have a completely indecisive candle. This is actually called a doji candle, a candlestick that looks like this. If it looks like this with the line being more towards the top, that is what we call a dragonfly candle. I'm probably totally misspelling this. Dragonfly candle. Or if it looks like this is what we call a gravestone doji candle. But at the end of the day, they are all just indecisive candles. They don't mean anything. They don't tell us to enter. They don't tell us to exit. They're just kind of there, right? So here we have candles with long wicks, buy-side candles with long wicks right here, right? So this is telling me that even though we're pulling up, we don't have enough strength to do something like this. So if I were in a put position or sells or I was going short, whatever it is, right? I would think to myself, like, okay, even though we're pulling up, we're not strong. We're probably going to end up coming back down. And that's exactly what we did. Is this making sense to you all? So with candlesticks, they're not just little lines, right? They are telling us stories about what the trend of a stock is doing.
So what I was showing y'all, how that shit look before you even zoom in on that shit. Y'all see that shit look like lines, up and down lines. You zoom in, they are candlesticks, literally candlesticks. That's what you got to learn how to read.
So even if we look down
What was the last one?
Here, a strong here, right? This decisive candle. This is actually called a doji candle, a candlestick that looks like this. If it looks like this with the line being more towards the top, that is what we call a dragonfly candle. I'm probably totally misspelling this. Dragonfly candle. Or if it looks like this is what we call a gravestone doji candle. But at the end of the day, they are all just indecisive candles. They don't mean anything. They don't tell us to enter. They don't tell us to exit. They're just kind of there, right? So here we have candles with long wicks, buy-side candles with long wicks right here, right? So this is telling me that even though we're pulling up, we don't have enough strength to do something like this. So if I were in a put position or sells or I was going short, whatever it is, right? I would think to myself, like, okay, even though we're pulling up, we're not strong. We're probably going to end up coming back down. And that's exactly what we did. Is this making sense to you all? So with candlesticks, they're not just little lines, right? They are telling us stories about what the trend of a stock is doing. So even if we look down here, right? Off the open, the stock is coming down. Open here, close here, open here, close here. We have good strength until we don't. So here we see the first candle start to push up. Buyers are kind of stepping in. Okay. Here we have a candlestick with the body in the middle, kind of indecisive. Okay. Here we have two indecision candles before we end up pushing up towards the upside. Okay. So when you're looking at charts, don't just think to yourself like, oh, these are just red and green lines and red and green boxes. No, they are all telling a story, right? So once you pair these with volume, once you pair these with a strategy, it's going to help you be an all-around better trader. So if you are a newbie and you are a beginner and you're like, what is a chart? This is the best way to start. Out of everything that I have ever learned in my trading career, I honestly feel like learning to read candles is the biggest thing that has helped me be a great trader. More so than, learning about levels, more so than learning about supply and demand zones. Because at the end of the day, the reason why I'm so anti-Discord groups that send signals is because they'll be like, oh, enter above or enter below this level right here, right? However, let me actually give you guys a really good example why I don't like signals groups. All right, let's say somebody says, let's enter into puts. And if you don't know what that is, in options trading, a put means that you think the stock is going to go down because you can make money whether a stock goes down or upwards, right? This little level right here is at...
You can make money both ways, chat. Buy in the sell. Red is sell, buy is green. But you got to know when to buy, when to sell. Because if you say, for instance, at the top right here, where she put in, well, she didn't put shit in, but it's just where it's at. So if you put in right here that it's going to keep buying, you would have lost money. Because the buy goes up. You got that bitch was go up, but that bitch went down. So you'd have put about $100 in. That shit just taking your money down. Shit took about $40, $60, $80, whole $100 gone. Your $100 gone like right here, damn near. You put it in right here, that's gonna go up. It went the whole opposite. Now that $100 gone. You feel me? So I say you can get your money can get took if you put in the wrong way. That's what I'm saying. And you gotta be careful on how much money you put in at a time. Feel me? Like you ain't gotta just put in a whole 100 at the time, but whatever you put in is what is taken off of, or what is gonna gain off of. That's how that works. So if you would have put in at the top when the shit was right here as a sell, which the sell means it drops. So you're gonna make money off the drop. So that means as it's dropping, your money going up. It's going up, money going up. Fluctuating right between. Money's still going up because overall it was at the top and it dropped all the way down here. So you either would have took your money out and know when the last drop was gonna be, or keep it going. It's up to you. It's your money. You watch your money grow though. So you able to take your money out whenever you want to make. If you literally made from right here to down here about $1,300. That's for example. You could take out the whole $1,300 if you want to. And just get back in and watch the shit, honestly. Or you don't have to take the whole $1,300 out. I mean, you could take out $800 if you want. Just leave the rest in there. Watch that shit grow. It's all up to you.
2084. If someone says, hey, enter in for a put position below 2084, if you are just following signals and you don't know how to read price action, you don't know how to read candles, you will lose your house, car, dog, and kids. Okay. Because right here, right? Technically it touched 2084. If you would have entered for a put right here, you would have lost. Same thing right here. It technically touched it. If you would have entered, you would have lost. You would have lost here, here, here. If you would have entered
I'm over here. Thank you. So it's like motherfuckers would have, like she said right here. I didn't say we would have put it on a put, which go down, and it went up. We would have lost money. It didn't go down. It went up. She put right here on that arrow. That shit went. They said put it on a put, and it went down, but it didn't go down. It went up. You would have lost money because it went up. So put equals sell. Sell equals put. That's just a terminology for it. So yeah. So yeah, you would have definitely lost money if you put in on a sale. Even though it was selling off and on, but if you reading the chart right, you could tell this shit is about to buy. And what happened? It did exactly what it did. It went up.
Entered right here trying to get in prematurely, you would have lost. If you would have entered in here, you would have lost, right? Trading, there is so much more that goes into entering a trade outside of a stock hitting a certain level. Okay. So if you aren't reading your candles, if you aren't seeing the strength, if it looks like there's no strength around that entry, there is no entry, period. I don't care if you spent $500 a month on a Discord and they said enter puts here. You should be able to read charts for yourself. With all that being said, I hope you guys really enjoyed this video on candlesticks. Now, I know this is not everything you would ever need to take a trade, but I do feel like if we can break things up into small concepts, it would make it a lot easier. So what do you guys want to learn about next? Do you guys feel like you want to learn about market structure again? Do you guys want to learn about levels? Do you guys want to learn supply and demand?
All right, that's it for that right there. So what y'all think? What y'all learn from what we just watched? What did y'all learn? Anybody? What did y'all learn from that? I'm gonna pull up another video in a minute. But what did y'all learn from that? The basis of candlesticks. Yep. Bear versus bull. Yeah. Okay, at the end, the replay gonna be. I had to restart this video like 4 times for people that was missing it. So it's really just about watching and seeing when to put in and how to read the candlesticks exactly. How to watch the candles and the wicks, the combo between buyers and sellers. Yes. There we go. Y'all on task. Y'all on the right thing. At the beginner trading, a trader, you keep 4 principles firmly in mind. Right? Think long term. Real success in trading is built over time, not overnight. Remember that. Think long term. That's why I said when you getting money out the shit, you don't just want to take out all your money. Because look, imagine if, like I was telling y'all, we was in Bitcoin from the beginning of Bitcoin, 0 cent. And I put in that $50 throughout that time. From $0 to that was 2009 to right now 2026. I done got $4.4 billion. Feel me? So as of right now, if I had that money in there and I decide to take all the money out, right? That'd be dumb to take all the money out. But I mean, it's only dumb. So this is where it's pros and cons, but because you can still make more money off of the beginning where you started at. Remember, if you took out all of it, that means now you have to find a new starting point on the get in Bitcoin. Versus when you was at it at the beginning, where it's at right now, 79,000. You know how long it would take for it to reach $0? It would take a long ass time for it to reach $0. You gotta think about that. Depends on when you got in on the market. Or you probably got in on the market at 30,000. Feel me? And it's at 79,000 right now. Feel me? I don't want to take all my money up, but I'm gonna take some money out of there though, for sure. I'm taking money out. I can still have money in because I was at the $30,000 mark versus at the $79,000 mark. You feel me? So it's gonna take a minute for it to even crash down to 30. You know, since Bitcoin is a number one cryptocurrency, of course it's gonna drop down once it go up so high. Like she said, what goes up must come down. But eventually it goes back up. It's always gonna keep moving. That's number one. So remember that you don't always want to just take out all your money, even though you like, damn, I just put $10 in here and now I got $700. Like, it's really up to you what you gonna do. Like, you could be like, when I first started doing it, I wasn't doing a long-term trading. So when you're doing day trading, that's like when you actually making money throughout the day. Like I didn't put in, I just made $500 right here. I'm still watching the chart. Boom, let me get in. Get in. Boom, I just made $700. Boom, taking it out. Boom, I'm still watching that shit. Boom, I put in $50. Boom, I probably just lost like $80. You feel me? But I'ma stay in. You feel me? Like, I'm reading the charts too at the same time, so I know what's going on. You feel me? So like, that's day trading. Like, you doing that shit during the whole time. When you doing stocks, is what you long-term investing in. That's when you put that money in and you just let that shit just go. That's how it works. You just put that money in, just let it sit. You got money that you do that with, then you got money that you day trade with. You feel me? You fluctuating throughout the day. I done made 800, another 800 this day. I done made 1,600 this day. I'm chilling out. Shit, I'll get on in a couple hours. You feel me? You could do it, boom. Or you could just be done for the day. So your goal to make $1,800 that day, you didn't do your day. Next day, boom. Now I'm trying to make $3,000 the next day. You feel me? That's day trading. That's why they say day trading. You're doing this day by day by day. Trading, making money, making money, making money. That's why you got to learn how to read this shit. All right. Y'all want to watch another video by Sierra? Did y'all like her teaching? I feel like she real simple with it. Mike, where you at? Where is Mike at? How y'all feel about her videos though? What y'all think? I like her. She got a good course. Yeah, she cool. She cool. Fuck with it. Nobody else liked her. Tough crowd. It's a tough crowd in here. I'm in her group. Breaks it down. Let me turn. Oh, you in her group? Oh, okay. Well, shit. Like I was telling they asses, you don't need to pay shit to get in nothing. Honestly, you can learn. We can learn all this shit right from YouTube. Like, we don't even need nothing. We ain't need nothing. What does he say? We ain't need nothing. Hey, fucking Shay, fucking shout out to you, baby. Thank you, baby. Thank you. We ain't need nothing. We on here for free. W's in the fucking chat. Yeah, hell yeah. Oh shit. You love her channel, gotta tap back in. And get back with it. Not playing. University of YouTube. This is free. Now, let me find another one. Let's find another one. Let's find a whole nother one. Yeah, the how to read candlesticks though, that was definitely a major one. You going to sleep? Money don't sleep, baby. You gonna have to just watch my video.
Trade futures on the go with NinjaTrader Mobile.
I'm gonna leave it on my page for sure.
It's on desktop and mobile, so you can study them on your computer.
This is
It's like
more
this,
like
I would have
a-
told you that you lost your mind. One thing that I realized as somebody who now teaches people how to do exactly, I feel like, I don't know, y'all, I just feel like trading could just be so hard sometimes.
it's
And
not-
I don't
it's
mean
more of a
hard
just
from the
to be.
perspective like the act of it is hard, but people make it seem so much more serious. Granted, it is very serious. Trade and
Mama.
invest at your own risk. But we don't have to use all the big words. Let's break it down like we are actually kindergartners. And I know y'all are here for that and not me, so let's get into the video. Okay, so fun fact about me, I was actually in school to be a teacher before I decided to do day trading full time. So one thing you're gonna learn is I love a PowerPoint. So we're gonna be working off of that today so that we can all be on the same page. But don't worry, we'll get into some
We ain't on
charts
the
too.
same
Today we're gonna
page.
get
We
into
ain't on
what
with that
is
shit.
trading, because if you even want to learn what options trading is, or futures trading, or forex, or cryptocurrency, any market, you have to understand what it is that we're actually doing here. All right, so
What makes
for this
sense?
class, there is no experience needed. I'm not asking for you guys to have a finance degree. I'm not asking for you guys to have some Wall Street background. I am literally just a 23-year-old girl from Chicago. Okay, I would like to think that I've done well for myself doing this. So hopefully you guys have the same curiosity and willingness to learn that I did when I first started. This is going to be a safe, judgment-free learning space. There's no stupid questions here. So if you guys want to comment something down below, if I know the answer, I will make sure you guys understand that. But we're going to be understanding the foundations of trading. I am not going to sugarcoat anything to you guys. I pride myself on that, by the way, being a strict teacher, because I feel like people just try to sugarcoat trading, and what do you gain from that? All right, before we get into what is trading, we have to talk about what trading is not. Trading is not a get-rich-quick scheme. So if you're somebody who feels like, oh, I need to turn $50 into $5 million by next week, day trading is just not going to be for you. Like, you would be better off at a casino and going gambling. And I think the reason why a lot of people get discouraged with day trading is because they come into it feeling like, oh, I'm going to make so much money and I'm going to, you know, start all of this in 2 weeks. And so by 2 weeks later, when they've spent $6,000 on somebody's course and they haven't made any money, they're like, oh, trading's a scam. Oh, I don't want to do this anymore. And that's great and that's fine and all, but this is not what trading is about. Trading is about executing, seeing your setup, trading the same setup all the same time, right? Trading is also not a race. You don't become a great trader in one business day, not a month, some people not even a year. Do not get discouraged a week out. Think of it this way, right? Like if you were in college and you were trying to earn your degree, I'm not going to get discouraged if I don't have my degree in 2 days. I understand it's going to take me 4 years to get my degree. So with that being said, please, please, please give yourself time to learn. As somebody who does have a trading group, I have a Discord, by the way, you guys should check it out. I see a lot of people come in there and they'll always be like, oh my goodness, I've been here for 2 months. I'm so discouraged. Like I'm not where I want to be yet. I'm like, 2 months? Do you guys think if trading was so easy to where if you start for 2 months, now you're a millionaire, everybody and their mom wouldn't be doing it? You get what I'm trying to say? Anyways, trading is also not a guarantee based off of how much money you spend. I run into a lot of people who spend all this money on courses, $5,000 here, $10,000 here. They'll spend $500 a month on Discords. All that I think is crazy, whatever,
crazy as
to each
fuck.
their own. But they will spend that much money and think because they spent that much, they're guaranteed to make money from trading. Okay, so what is trading, right? Trading is the act of buying and selling financial assets like stocks, options, futures, with the goal of making a profit from price movement. So think of it this way, right? You go to a yard sale, you find something valuable for cheap, and then you sell it for more than you paid. That's essentially what trading is. Like if I were to go buy some sneakers for $200 and then I sell them for $250 because they're more valuable now, that's what you're doing when you're trading. Unlike investing where you buy something and you're holding it for years, trading is about catching shorter term moves. You may hold a position, meaning a trade, for minutes, hours, days, or a few weeks. So you're not buying and holding forever and ever and ever. I don't know if you guys have ever heard about long-term investing when you guys were watching this video, but advice that I always see people say is if you want to invest long-term, invest in companies that you use. Me personally, I feel like that advice is hot flaming garbage. And the reason why, I'm not
Invest into companies that you use. Did you hear that? What's something that you use? NVIDIA is one of them. That's one of the computer technology. Apple. Shit, people do use Bitcoin. That's why that's number one. 'Cause people do purchase shit off of Bitcoin. Microsoft. Yeah. Anything PC wise. Acer. Shit, it's so many different ones.
Not saying just because you like McDonald's, don't go invest in McDonald's, but there's so much more that goes into long-term investing. You really
Amazon.
need to have faith, not personal faith
Exactly.
in the company, but understanding of what goes on behind the scenes. Example, right? If you guys are familiar with Southwest Airlines, they used to always have 2 free bags. That was their big selling point, like, yay, Southwest free bags. But then they recently announced they were going to start charging for bags. And everybody thought to themselves, like, oh my gosh, like, the stock is going to go down. I'm going to lose money, whatever. But the next day, the stock actually ended up going up. The reason being is because as an investor, them now charging for bags is going to bring so much more revenue into the company. When you're looking into long-term, and this is again, just a little sidebar, think of it from the perspective of an investor and not a consumer. And that's going to help you figure out where you should be putting your money in long term anyways. Trading is active. You are making decisions based off of what the chart is telling you. You are reading price action, studying patterns, and executing based on your analysis. You do not need to be a math genius or have a Wall Street background. You just need to understand a few key concepts, practice consistently, and manage your risks, meaning don't put everything into one trade. When people tell me like, oh my gosh, I lost everything trading, I'm like, why would you ever put everything into one singular trade? That doesn't even make sense to me. The simplest way to think about it is that you are trying to buy low and sell high, or sell high and buy low. That is what it is at its core. And you can make money both ways. One of the biggest myths about the stock market is that you can only make money when stocks go up. That is wrong. Because in trading, you can profit when prices go up by buying what is called a call option. A call is basically you saying, I think this stock is going to go up and I want to profit from that move. You can also profit when prices go down by buying what is called a put option. A put is you saying, I think this stock is going to go down. I want to profit from that drop. And you're going to notice throughout this presentation and through these slides that I have, y'all, is that I'm going to have study points at the bottom. Whether you guys want to come join my academy and learn here, or you guys want to be YouTube University students, or y'all want to go on Twitter or Reddit or whatever it is, I'm going to put study points for you guys so that way you guys can learn on your own and teach yourself how to trade. That's how I did. I taught myself how to trade. So I'm definitely a big fan of teaching yourself if that is your prerogative. So for a recap, right, let's think about this. Our first thought, centered idea as far as trading goes, specifically options trading. A call means that it's going to go up, right? A put means you think that it's going to go down. This means that there is always an opportunity to make money in the market. No matter what the economy is doing, no matter what the news says, up or down, there is a trade. So when people are like, oh, well, how do you trade if, what if the stock market crashes tomorrow? And what if you lose all your money? Listen, y'all, hear me when I say this. If the stock market crashed tomorrow, I would be, on a beach in Monaco in like the teeniest tiny bikini, enjoying my life. Champagne, caviar, the whole thing. That is how much money I would have made. You know what I'm trying to say? So please don't panic and think to yourself, oh, if the market goes down, then I'm just out of luck. You're not. And that's the thing that I love about trading. So if we have a word association, that's the way I like to think about it. Green arrow up equals calls. Red arrow down equals puts. So up, if you think the stock is going to go up, calls. If you think it's going to go down, puts. One of the biggest advantages of trading over traditional investing is that investors can only make money when the stocks go up. Traders make money in any direction. There are 2 major players in the market, the bull and the bear. Trading terminology 101. Bullish means that we're going up. Bearish means that we are going down. The way that I like to think about it is if I had a friend, right, and I was going to call her, I could say I was going to call her up, right? So calls, up, bullish, that's what I'm thinking about. If you think about bulls specifically, like have you ever seen like a little matador and they have the little red little towel thing and they raise it up, the whole thing? Bulls, if you were to get hit by a bull's horn, you would get struck towards the upside, right? Whereas bears with their paws, they strike downwards. So I like to think to myself, bulls up, bears down. As a girl from Chicago, I say bear down because that's our saying for the Chicago Bears. That's my thought process. So as far as your word association, it's like green, calls, up, bullish, right? Other side word association would be like red, puts, bears. You know what I mean? That's the word association there. So the difference between trading and investing, right? Investing is like when you buy an asset, like a stock. You're holding on to it for a very long time. We're talking years and sometimes decades. You're banking on it going up over time, versus trading is when you buy and sell over much shorter time frames. You're trying to capture profits from price movements that happen in minutes, hours, days, etc. Investors ride out the ups and downs of the market. They're in it for the long haul. Traders like us and who we're going to be, they try to profit from those ups and downs as they happen. Neither of these are better or worse. They're just different strategies, different goals, different time horizons. And you can absolutely do both. You can invest for long-term future while trading for shorter-term income. You don't have to pick one or the other. But today, specifically, we're going to be focusing on the trading side, specifically options and futures, but knowing the difference is important context. So an options trade, right? An option is a contract that gives you the right to buy or sell a stock at a certain price before a certain date. So options contracts have expirations. That's very, very important, okay? You're not buying the actual stock, so I can't keep it until 30 years and then retire off of an option. You're just buying the right to, right? There's two types of options, and that's what we talked about, calls and puts. So a call means you think the stock price is going to go up, and a put option means you think the stock price is going to go down. Options do have expiration dates, unlike stocks, like I said, that you can hold forever. If you do not use them or sell them before expiration, they just become worthless. And one of the biggest reasons why beginners are drawn to options is because they cost less than buying actual shares of a stock. You can control 100 shares of a stock for a fraction of the cost. So think of options trading like a coupon, right? You pay a small fee, which is called the premium. That's how they're priced at, for the right to buy something at a set price. If it moves in your favor, that coupon becomes really valuable. For example, if Apple's trading at $200 and you think it's going to go to at least $210, you can buy a call option for much less than buying 100 shares of Apple. And you can sell it for a profit. And the good part is it doesn't have to hit 210. From once you enter, as long as all your factors are lining up, you are in profit all the way up to 210. Options trading is powerful because it gives you leverage, meaning you can make significant returns from relatively small price movements. It works both ways, so risk management is key because you can also lose a lot if you're not correct. The study point here, options contracts in Greece. So if you're taking notes and you're like, hey, what videos do I find next? That's where I would go. So the options market is open between 8:30 a.m. Central to 3 p.m. Central. You can calculate for your time zone. I'm Central, so that's what it is. With options, you're trading companies like Apple, Amazon, Tesla, etc. Whereas futures trading, you are trading almost 24 hours a day. The futures market is open 23 hours from Sunday evening all the way through Friday afternoon. That is a huge deal, especially if you're someone who works a 9 to 5. Because of extended hours, you can trade before work, early in the morning, after work in the evening, or even late at night. This makes futures much more accessible for people with full-time jobs. The one downside is it's not always moving, so you're not always going to see great movement like you would at New York Open at 8:30 in the morning, right? But popular futures markets include the S&P 500, the NASDAQ, gold, oil, and many others. So you're not trading companies with futures. They're massive markets, so that's a good thing, meaning that there's always people buying and selling. It's a little bit different structure-wise than options trading, but I would say steady margin requirements. Many traders find futures to be more straightforward once they understand the basics. Contracts are standardized, options are deep, and the price action is clean. If you've been struggling to trade because your work schedule just does not line up, futures trading may be the route that you want to take. So you're probably wondering to yourself, what is the main difference between options and futures? So we're going to go over a few things. 1, expiration. Options have set expiration dates and they can expire worthless, and futures also expire, but they roll over into the next contract period, so that market is always available. Realistically, you will never hold a futures contract until expiration, so you're fine. Okay, trading hours. Options trade during regular stock market hours, so from like 9:30 to 4 p.m. Eastern. Futures trade nearly 24 hours a day, Sunday through Friday. Futures, I would say, is also better for 9 to 5 workers. If you can't trade the morning, futures is going to be a better option for you. Personally, I'm a more options trader, but I have the time in the morning. So if you have the time, I would definitely say look into options. But the biggest thing is that both options and futures use the exact same charts and technical analysis. The candlesticks, patterns, and trends that you learn apply to both markets. So if we look right here, this is a stock chart. The left-hand side is a options trading chart, and the right-hand side is a futures chart. Now, one thing you're going to notice is that they look the same. This is what I'm trying to say, is an options chart looks just like a futures chart. So if you can read a chart for options, you could also trade futures, okay? So your focus shouldn't necessarily be like, okay, what market is? I feel like it should more so be focused on charts. So if you can read a chart, you can trade anything. Options, futures, crypto, Forex, commodities, whatever. The chart is the chart. It does not change based on what you are trading. The same candlestick patterns, the same market structure, the same trends show up on every single chart across every single market. Your skill as a trader is reading the chart. Whether it's Apple options, NASDAQ futures, Bitcoin, that's just the vehicle. The skill is the same at the end of the day. That's why learning the fundamentals is so important, because once you understand price action, candlesticks, market structure, which check out my videos, I have some on those, and trend, you are not limited to just one market. You need to get a strategy first. I have seen traders go from options to futures to crypto and back to options, all using the same exact strategy because the charts read the same everywhere. So please don't stress about choosing the right market right now. Focus on learning to read a chart, master that skill, and the entire world of trading opens up to you.
That's it. Learn how to read the charts. But not learn how to read the chart on learning how to trade. Basically the candlesticks. Then you'll be able to trade in any motherfucking market.
I want to say this though, before we get into anything else. When you guys are watching these videos on trading, please don't get in the habit of just watching as many videos as you can. If you watch a video on candlestick patterns, open up a chart and see if you can see a candlestick pattern. Figure out if you can master that before adding more things, because you'll get in the habit of watching video after video after video. And then when it's time to actually execute, you're going to feel like, okay, I don't know what I'm doing, even though I watched all of these videos. So please, please, please watch something, check a chart. Watch something again, check a chart. Now we're going to get into brokers and platforms. A brokerage account is the app or platform where you basically place all your trades. You can't place a trade straight from your bank account, okay? You deposit money into your brokerage account, and that is the money that you use to trade. When you make a profit, the money goes back into your brokerage account, and if you lose, obviously it comes out. Without a brokerage, you literally cannot access the stock market. You need one to execute any trade, whether it's stocks, options, or futures. Different brokerages have different fees, features, tools, deposit requirements, etc. But I want to tell you guys what I use personally. I really like Webull. That's the brokerage that I use for options trading, and it's what I recommend for beginners in the United States because it's commission free. They don't really charge any fees to trade. You're not paying a fee to buy. You're not paying a fee to sell. It's a big deal when you're first starting out and you don't want to pay a whole bunch of money. I like it because the interface is clean, it's modern, it's beginner friendly, and they also offer paper trading, okay? Paper trading is trading in real time with fake money. If you do not know what you're doing, do not put money in the stock market. Like, you don't get a gold star for going out there and losing all your money, okay? Please paper trade first, and we'll talk about that next. But at the bottom of this slide, and I'm going to include it in the description box of this video, I have a link for Webull. If you sign up using my link, I think you get a free share or something. So that'd be fun. But either way, listen, I'm not the police. I'm not going to come get y'all. So to quickly go over paper trading, I don't recommend anyone start with real money. You can paper trade on your broker until you get the hang of it. If you can't turn 1,000 into 2,000 on paper, you can't do it with real money. And taking it a step further, I don't think anyone should start with more than 1, maybe 2,000. Because here's the thing. Let's say you saved up $10,000 and you're like, okay, I'm ready to invest. I don't want you to get out there and lose 10,000 of your hard-earned dollars. You should focus on saying, okay, hey, I'm going to trade with, $1,000, see if I can make it to so on and so forth. I've seen people start with as little as $50 to $100. I recommend at least $300 to start. If you don't like Webull, they have other brokers, Charles Schwab, Interactive Brokers if you're international, Robinhood. But please hear me, when applying, you need to go on YouTube and type how to get approved to trade options on whatever platform. Because if you don't get approved to trade options, it's a whole hassle on trying to upgrade your account. So watch that video before you apply. Now, once you have a broker, you need a platform to look at your charts on. So the platform that I was just showing you guys for the charts, TradingView, this one right here, this is how I go in and I take all of my trades, right? So when I'm looking at charts, it's because I'm looking at TradingView. TradingView is kind of like if you were to play video games, right? When I am looking to run, jump, shoot, whatever in the video game, I have to see it on my TV, right? And then I use let's say my PlayStation, what do you call it? The controller, right? Your controller is how you actually go in and run, jump, shoot, whatever in the video game. So think of it this way. You're watching charts on your computer, and then you take your phone and you enter into your trade, and that's where you're going to say, hey, I'm going to enter here based off of what it is that I'm seeing on my chart. One thing I love about TradingView is it's on desktop and mobile, so you can study them on your computer or at your phone. My suggestion is to get the free trial of it before you guys do anything at all. And so the TradingView website looks like this. Once you get here, you're going to want to go to get started for free. Personally, make sure, unless you want to pay the annual fee, they usually go like 70 to 80% off for Black Friday, so I would wait for that or some sort of holiday. Make sure you're on monthly when you get your free trial, because otherwise, once your free trial is over and you're on annual, it will charge you for the whole entire year. So me personally, at this
Yo, well, I'm still in here. I had to take a phone call. So everybody understand how the trading works.
This call will be recorded and monitored.
All right, so y'all do understand how it works. Do y'all have any trade? Do y'all got trading apps or no? Okay, what you be using?